Good afternoon, folks. This is another episode of the Grimaldo Group, where we love helping families create wealth through home ownership. And we have with us today Ziad Kizy. I believe I pronounced his name correct, and he's based out of San Diego. He is a mortgage officer or lender, specializes in complicated cases, first-time home buyers, VA loans, 1099ers. Those of you that understand the complications that may bring, we'll dig in a little bit into that. And we wanted to have him here with us because we like partnering with like-minded individuals. I've been chatting with Ziad. I've even had the opportunity to meet with him in San Diego. And thank you for being with us. How are you today?
I'm doing great. Thank you for having me, Angel. Absolutely.
Well, we like coming together, taking some time midweek, speaking with folks in the field of either lending or real estate.
Mm-hmm.
And sometimes we've even branched off and had other people with us that motivate, have inspirational stories. And having said that, how long have you been a mortgage officer?
Over 20 years, about 20 years, since 2001. So it's been a long time. A lot of ups, a lot of downs. Yeah.
So you started when you were like 10 years old?
When I was 20, but thank you for the compliment.
I mean, I got to get a haircut or something because look at all the gray hair.
When you're bald, actually makes you look a little younger, I think. So trade secret.
I'll take care of that then. So tell us a little bit about yourself. We're going to focus on the mortgage side, which is what people really want to hear. But I like going a little bit deeper. Who is Ziad? What are you all about?
Wow. So that's a deep question, but no, I'm a bowler, I'm a golfer, a dad, and a loan officer. So I think that the balance is important to have. You work hard and you have to play hard also, and have time for yourself. So that's really important to me. So I do a lot of other activities, but when we're at work, it helps me focus a lot more that way. But yeah, I started as a stockbroker. Actually, I passed my Series 7 when I was 18, and
Wow.
it was a really tough to get the license. But after I did get the license, I couldn't get anyone to invest with me, and I suspect the reason why is because I was 18 years old. And why would anyone listen to an 18-year-old? But I definitely learned a lot about sales. And so for 2 years, I grinded out until I was 20. And I didn't make any money. And I thought it was a big waste of time, but it turned out to be the best learning experience that I can imagine. And then some of my friends were loan officers. So they said, hey, we're doing this, we're doing well. And so I thought helping people save money is a much easier sell than trying to get somebody to invest money with you. And at that young age, of course, I just wanted to go the best route I could. So I switched to lending. And I think the sales techniques that I learned, or just everything about people, about talking on the phones, the experience that I gained from that helped me succeed as a loan officer. And
That's awesome.
Yeah.
Now, so
right.
You mentioned you're a family man.
Mm-hmm.
You do some sports, you do other activities. And I think that all comes down to us helping you relate to people. You have good relational skills. I've seen your style, and you can come together with people and assist them. Like that part about helping others, of course, it is a business.
Mm-hmm.
But if you can have a business and also reach out there and help people reach their goals and their dreams, that's a good thing.
It's a fulfilling business, right? You're helping people and you're making money and providing your family with a living along the way. So what can be better? And my goal really at the end of the day is to make sure people are happy, comfortable, and understand everything, which is kind of a big deal when it comes to a house, because there's so many numbers, there's so many things to go over, and you need a guide through that process.
Now, the company name is Cornerstone Mortgage, correct?
Yeah.
You're based out of La Mesa, California, which is in San Diego.
And our corporate office is in downtown, and we have an office here in La Mesa. Exactly.
Okay. Mm-hmm. Now, how did you get so you mentioned at the age of 18 is when you kind of started getting into finances, and then
Right.
you eventually got into the lending side.
Right.
Um, Prior to that, before you were an 18-year-old,
Mm-hmm.
what do you think geared you to financing?
It was just by chance. I started college, community college, and then a friend of mine was telling me about being a stockbroker, and the money at that time that he explained to me was crazy, and so I pursued that, and then that didn't go anywhere, and then it ended up that I ended up being a loan officer. So it
So
was just by chance.
you've had some bumps along the road.
Oh yeah, definitely. I mean, there's ups and downs in any road, and then I think that the more bumps you go through, the more experienced you are. And the bumps that hurt the most are the best lessons that stick with you the longest. So the climbing the mountains along the way, I think, is very, very valuable, and I think it's helped me relate to people too, because there's ups and downs. So definitely have
So
gone through ups and downs.
with mortgages, like I'm in that field on a different side,
Hmm.
but sometimes we run into challenges
Sure.
and we have to adapt and overcome.
Hmm.
And then if we can instill that in our customers and our clients,
Right.
that's a major plus, because it's sometimes buying or selling. Today, buying is very challenging. And
Sure.
then in financing, it's not like some people compare, they're waiting for that crash to buy.
Hmm.
And they want to consistently. I was talking to someone yesterday, and I told them, unfortunately, a lot of folks want to remain living 2007, 2008,
Hmm.
but we're in the future. It's a
Sure.
different time. And what happened in 2007, 2008 is completely a different ball game. Today, to get approved for a mortgage is not 2007, 2008. Am I correct?
Oh, it's night and day difference. There's so many more regulations. It was the wild, wild west back then. I mean, there was no like governing body to direct you in a certain way. So it's much different. They're much stricter. The guidelines were so loose back then that really, if you had a pulse, you can get a loan. I mean, that's what it was back then. And then now it's a lot more strict, which is much better because they're only giving loans to people who can pay them back, which keeps the whole system moving forward. And that's the
Correct.
problem we had in 2008. And I know a lot of people try to play the market. And if you're an investor, I can understand that. When you're investing in a property, it's all dollars and cents at the end of the day. But when you're going to live there, there's an added value there. And if you're going to buy the house to live in, you're not going to sell it, and you don't lose unless you sell. And the trajectory of real estate, really, it kind of looks like this, where it's up and down, but the trajectory is up.
Yes.
So what I always tell people, listen, do you like the house? Do you like the payment? Yes, that's it. There's really not much more to it, because you're going to live there, you're going to enjoy it, and it's going to appreciate over time, even if it goes up and down. As long as you don't sell, you're okay.
Well, I mean, everyone needs a roof over their heads.
Sure.
I always say that time and time again. People that know me, they know I say that. And one of the things that I bring up is you're either going to pay your mortgage or you're going to pay your landlord's mortgage.
Mm-hmm.
Your mortgage is going to work in your favor down the road. As a matter of fact, it's going to work in your favor now because you have a tax write-off, the interest, and so on. It's just a matter of making a choice that's going to work best for you. Now, speak more in detail. What are the products that you offer with with Cornerstone?
Really, anything residential up to 4 units, we can usually get done. VA, FHA, conventional, all the normal stuff. The clients that I work with, a lot of them are first-time home buyers, and they come to me, and if we can't figure out, all I am is I'm providing you with information. A house is a huge investment, biggest investment of most people's lives. So it's really important to kind of prepare and get ready if you want to buy in the future, as opposed to just saying, "Hey, I want to buy. Let me go shopping right now," for a few different reasons. One, when we start, we're going to sit together, and all I do is give you information. We're going to figure out your income, assets, credit, and I'm going to tell you what you're qualified for, the max you're qualified for, and then the payment that you're qualified that you're going to have. And then when you're shopping, now your expectations are in the right area. I've seen it many times when people start shopping before they get pre-qualified, and they're shopping for a house that's out of their price range, and they've been looking on the internet and everywhere else. And now when they go to see properties in their range, they're disappointed. It's a different feeling. And then buying a house, I mean, it's a joyous, it's a blessing, to do it. And then it kind of taints it a little bit because you're comparing everything to something that you really can't get. So the first step should always be, let me find out what I'm qualified for.
Yes.
And in the event that you come to see me and you're not qualified, then we're going to figure out why you're not qualified and how to get you qualified in the future.
Yes.
Just one way or the other to get you in a house. Like you were saying before, rent is throwing money in the garbage. When you send your payment on a mortgage, half your payment is going to your piggy bank, which is a house. And then your piggy bank is appreciating in value. I mean, you're making money while you're asleep. So hand over fist and the tax write-off. I mean, owning is hand over fist better than renting any day of the week.
And that's why we call it, we always say we love helping families create wealth through real estate. Mm-hmm. And it's a compound effect. And I keep mentioning that. So everyone says, Angel keeps mentioning the same thing, but the more you hear about it, the compound effect. And then 10 years back, when you look and you're down the road, you look back, you're going to say, wow, it was well worth it. You're not even noticing it because you're either going to pay rent, which rents go up. Mm-hmm. But when you're paying your mortgage and you get into the rhythm of it, 10 years later, they go by quick. You look back.
Blink of an eye feels like.
Now, what about 1099ers? Can you explain? Because some people don't even know what a 1099er is.
Sure. So the way that you report your income is important when it comes to lending. If it's a W-2, it's a certain calculation that we do. And if you're 1099 or self-employed, it's a completely different calculation with different guidelines. So if you are self-employed, you have to have a 2-year history with that specific business. If you're W-2, then you just need a 2-year history. So if you have a history of working, but you've changed jobs, you're okay. So there's different rules and guidelines, and it's specific to everybody. So it's more of a let me see what I have to do, kind of go research and find out with a loan officer what I have to do and what I can get qualified for now, and if I'm qualified at all.
Despite, it can become somewhat complicated with 1099, depending on how they're managing their business and so on.
Sure.
But it's still worth looking into.
Absolutely. So it does get complicated, and there's 1099, there's corporations, there's, sole prop. There's so many different ways to report your income when you're self-employed. So it definitely can get complicated. And so you want to be with a loan officer that knows what they're doing, because when you start a loan, when a loan officer gives you a pre-qualification, it's simply them inputting information into an automated underwriting system that's spitting out an approve or deny. Now, when you get your offer accepted and then you go to the underwriter, now the underwriter's job is to make sure that the information that I inputted, or the loan officer, to get that approve or deny, was good information, that I did the income correctly. And so you can get an approval, a pre-qualification letter from a loan officer, and they did some incorrect calculation on a complicated scenario. And then you're in escrow and you paid a deposit, you paid an appraisal, and it gets to that underwriter and says, wait a minute, you did this incorrectly. Well, bad news. The underwriter gets the decision, not the loan officer that gave you that pre-qual. So it's really important when you have a more complicated or any situation to work with a loan officer that knows what they're doing. And there's so much to it. I mean, being a loan officer, the guidelines change. There's so much to it that really it comes with experience. It's like we talked about earlier, messing up and falling on your face and getting up. Well, that over 20, you didn't want me as a loan officer year, 1 through 5 probably, or even maybe a little bit longer. But the more mistakes I made, the more I learned. And now I'm using that as that experience for my clients to help them get their loans through smoothly.
Have you been known to answer the calls or emails after hours if need be at times?
Absolutely. I mean, with my business, I have to work when my clients are not working, and that's nights and weekends. And I don't mind working nights or weekends because, I love helping people.
I can see, and I've gotten to know you, that you do your job with passion. With you're on fire. And I bring this up because sometimes, and I don't want to take away from folks out there, but when you have a loan officer at a bank that works Monday through Friday and gets paid an income, and it's off on Saturday, Sunday, and holidays, it gets a little bit tricky, because me as a realtor, I like working hand in hand with a productive and outgoing and an on point lender, because when you have that fusion, it's going to be very beneficial for the client. Because I usually, when I'm out and about and I'm interacting with the lender and we see a house and they want to place an offer, like you said, we already know what their budget is. So we're effectively looking within that budget, and they find a house, I send it to the lender. Can you run the numbers so they can have a good understanding what their payment is going to be with HOA, with everything? And it brings that good unity to provide that extra great service for our clients. And where I've had to call the bank and I get an answer machine and they don't call back and so on. And if it's a Saturday and the deal, something needs to get tweaked.
And it's a fast moving market too. I mean, you have to be, and that's the thing about prepared buyers, is they put themselves in such a better position to get their offers accepted, and they can move so much faster than someone who's just kind of off the cuff. And I'm glad because we have, well, not just us, but there's a program called TBD. Not everybody provides it. But what it is instead of me providing you as a loan officer with a pre-qualification letter that, like we said, just simply me inputting information to a system, we can submit your file to the underwriter that's going to do the final stamp at the end. And then she goes through it and completely gives us an approval just on the buyer. And with the benefit of this is that now you have not a pre-qual or pre-approval, you have an underwriting approval that's waiting. It's TBD, to be determined. So the property address is to be determined. We get through the entire approval process with the underwriter. We clear all the conditions. And then now when you're, now all we need is a purchase contract, title, and appraisal. And there's a few reasons why this is important. One, because you're ahead of the game. Of course, you already have the approval. But two, in a competitive market, the seller just really wants to sell. They want to make sure the file is going to go through. So when they're doing cross quals, which is their loan officer checking in to make sure that I did my due diligence correctly, and they're doing so much to make sure this. If I accept this offer, this buyer is going to close. So this TBD program, when I call them and explain to them exactly what it is, a lot of them never heard of it, and we're able to get so many offers accepted. Because we have this positioned correctly. And we say, listen, this is not a pre-qual. This is an approval. All we need are these three things and we're finished. And then, and they love it. And we're able to get a lot of offers accepted.
I love it. Makes my job easier.
Yeah, right? Definitely.
So, but, going back to the scenario you presented where sometimes folks go out there looking at houses, and I've encountered folks going to open houses. They don't have a realtor. They're not even pre-qual, but they're going from open house to open house because they really want to buy a house. But and that's okay to go look at open houses because you're dreaming, and that's a good start. But that's like going to a Rolls Royce or Mercedes Benz dealer and looking at $100,000 and $150,000 cars because you have that desire to have one of these cars.
Yeah,
but your finances are not at that level yet. And so it would be good to first see a lender. I always like when people talk to me, I said, let's sit down. I like providing a buyer consultation. And with me, it can take 45 minutes of their time. But I also ask them if they have a lender. If they say no, then that's the first step. Let's see where we are with your finances. And that's going to paint the picture. And after we paint the picture, then we can go out there and actively pursue what you're looking for.
Right.
Now, where do you see yourself as a person and as a lending officer in mortgage 5 years from now?
I see myself 5 years from now with still as a loan officer. It's really the only thing I know I'm good at early at the end of the day. But still as a loan officer, but a team around me with the same kind of values, because there's so much, in this business, that if you do everything the right way, and it's not always easy to do things the right way, but if you do it, you fly straight, do everything the right way, be honest, you build such a strong foundation, and people can feel that when they're talking to you. And so loan officers around me that really have the same value, and maybe, my own team, or I already have a small team now, which I expect that it's going to grow in the future. And so that's where I see myself, a bigger team with the same values as I feel like that would be good for a company that my company at the end of the day.
Good. And then you are based out of San Diego, as we mentioned, but
Yes.
you also can help people in Arizona.
Yes.
Correct?
I am licensed in Arizona and California. So, and there are some other states that we could do. There is a list. I apologize, I don't have it with me now, but there are other states that we can dip into.
Now, California and Arizona, since they're right next to each other, we have a lot of activity of Californians picking up and coming to Arizona. That's been happening quite a bit. And so those folks can potentially see you. Hey, I'm selling my house. I'm going to be putting it on the market. Ziad, I'm heading to Arizona and I want to hit the ground running, or probably even before I get there. And I want a realtor, or I already have a realtor, but I want to get pre-qualified. So they can go to you in that scenario and get your assistance.
And Arizona is a hot market, man. I mean, it's a hot market. So if you are making a move, or you're thinking about making a move, for sure, figure out what you can qualify for, how you can qualify. There's things we have to work out where if you're switching jobs, so, because for the qualifying process. So there's a lot that goes into it when you're transferring, that you want to make sure that before you start, you're getting all your ducks in a row, and to make sure you're, crossing every T, dotting every I, and then moving forward with it. Because it's, like we said, it's a big move, and your house is your biggest investment. So to do your homework and your research is really important.
Well, we get folks that sell their house in California and potentially can buy a very nice house out here. They bring a good portion of their equity, but it's a good point that you bring up about their job. We have had a lot of folks that are able to come and work out of their residence, out of their home, like the fact that their job is
remotely. Sure.
Yeah. So as long as they get letters from their employer and so on, and get the blessing that they are, in fact, that's going to be doable.
That's exactly right.
So if you were able to go back 20 years, because you're 20 years ago, you were 20. Correct?
Yes.
So going back 20 years, and we spoke a little bit about when you were younger.
Yeah.
If you had a time machine, you jump on that time machine, you go back and you encounter yourself, what would you tell yourself?
20 years ago, I would tell myself that everything revolves around kind of virtue, business, family, because at 20, obviously you have a different mind frame than 40. So when it comes to really everything, it's the kind of the frequency that you let out into the world. That's what's going to bounce back to you. So if you're doing everything the right way and just moving forward as a straight arrow, then good things happen for you. And just keep your head down, work hard, and save your money, because I made a lot of mistakes in that over a long period of time.
We all
it took me a long time to learn to save money. So that would be one of the biggest ones, I think.
And then I always, because I asked the same question to myself. Sure. I says, and I've said this, the old saying in Spanish, which I keep repeating, is "Dime con quién andas y te diré quién eres." Tell me who you hang with, and I'll tell you who you are. Yep. So be very careful. Choose wisely who you hang with.
Yep.
And even today, I mean, I like hanging with like-minded individuals, people with a strong work ethic, with family values, a solid foundation, as you've mentioned, and that are passionate about what they're doing, because it makes me a better person.
Yeah.
And if we all bring that to the table, that would be a great thing.
And that also goes for the people that I work with, like the real estate agents. Really, I work with a lot of different real estate agents, and the ones that I feel are not kind of the company that you keep, like you're talking about, I distance myself from them, because if I refer somebody, I want to make sure that it's my name's kind of on that referral. Yes. So I want they're a like-minded person, that wants to do good for the customer first, and then it doesn't just have their eye on commission or whatnot. So that's really important to me too, and that's why I really enjoy working with you, Angel.
Awesome.
Absolutely.
Well, if you would like to close with any other additional information that the folks listening to us can take.
Definitely, yeah. So if you're interested, if you want to find out what rate you qualify for a refinance, or if you want to buy a home and you want to figure out what you're eligible for, please give me a call, and then we'll take it from there. We'll hold your hand through the whole process and make sure that you're well informed through everything.
And something that I failed to mention is PMI.
PMI.
Folks out there that are having to pay PMI that probably purchased 2 years ago, or even maybe a year ago, who knows, may be able to refi and do away with PMI. Can you?
Absolutely. The values have definitely increased. So if you put less than 20% down on your house when you purchase the property, you have private mortgage insurance. The values have increased since then. So if you were to refinance, you could get rid of your mortgage insurance and then drop the mortgage insurance and drop your rate possibly, which will make your payment a lot better. And then you're making your money work harder for you instead of you working harder for your money. So definitely a good idea to look into it, at least.
Yes, it's worth a shot.
Definitely.
Right?
Yeah. Just
so
see what's out there.
I always say, don't just assume you can't. Assume that you can.
Exactly.
And give it a shot. Ziad Kizy. I always practice the name because it's Ziad Kizy. Thank you so kindly for being with us. We've taken some of your time, but as always, a great honor to have you and to hang with you.
Thank you. And thank you so much for having me. Appreciate it.
Everyone, thank you for being with us. Until next episode, and may you have a wonderful day, and God bless.
God bless.